Morning, y'all. Happy Thursday, February 5th.
Trump's for president. Last week, President Trump said, quote, we have the groceries going down. Did grocery prices drop in 2024? Did grocery prices drop in 2024? I'm sorry, I don't know. Did grocery prices drop in 2024? So, statistics and it's not just statistics numbers. Grocery prices were 2.4% higher at the end of 2025 than they were at the end of 2024. Trump's public Department of Agriculture has projected that those prices will come higher in 2026 than under Donald Trump. Families are paying more and more for groceries. So if you just want to insult people, but deny facts that are out there and tell people that doing great for the strong and people, it's just a little bit the same. You have a plan to bring down those prices. You're not going to it's not just groceries. The numbers from Trump's own economic agency show that Americans are paying more for utility bills, more for healthcare, more for housing construction. Amazon food might be rising. Mr. Secretary, according to the reports on what's going on. Secretary Bessie, I have one question for you while I have you. You ran the switch for Donald Trump's chair nominee. Trump promised for anyone who disagrees with him will never be their chairman.
I don't know if you wanted to see that. I do. What can I tell you too? It's Mr. highly qualified. And why don't you tell the nation what you told me, that you held up Sarah Powell's nomination? Well, move on to the next one's realms.
Thank you, Mr. Chairman. Mr. Secretary, first of all, thanks for being here and for your service to our nation. I'm going to come back in and talk a little bit on the technical side for just a minute. The FSOC's 2025 annual report recommends that its member agencies use the Council's Artificial Intelligence Working Group to identify regulatory impediments to a responsible adoption of AI by financial institutions. From your perspective, what are the biggest impediments today that prevent banks from adopting AI responsibly, especially for compliance, fraud detection, and risk management?
Well, as you know, AI is an exciting and new technology, and there's a great amount of learning to do here. So FSOC, Treasury, the regulatory agencies are working with our private partners to implement in a gradual way robust usage of AI. AI can be a great tool, but AI, we have to also think that AI can be a risk through state and non-state actors. So it is a public-private partnership, and we are pushing very hard across the agencies and at Treasury.
FSOC's report also recognizes that overly complex and subjective supervision, like reliance on vague concepts such as reputational risk, as you mentioned in your opening statement, restricts valuable activities. Given FSOC's push for clearer standards and responsible AI adoption, would a time-limited AI sandbox for financial institutions with clear guardrails help firms test AI tools in a controlled setting while regulators evaluate risks and benefits?
Senator, that is clearly the one very interesting option, and we are considering that moving forward. We'd be happy to work with your staff on that.
I feel very passionate about that part. I would look forward to working with your team as well, sir. I'm also just curious. We've talked now, and the discussion will go on and on about how we build the economy and so forth. But I think just for the American public, since they probably don't get an opportunity to just have a back and forth with the Secretary of the Treasury very often, let's talk a little bit about how we really reduce the price of getting a home for the American family. I think a lot of it has to do with bringing down the interest rates that charging a 30-year mortgage. Can you share with us a little bit? We talked about treasuries, and you mentioned that the rate of treasuries, the cost of treasuries is coming down. Can you share a little bit about what it takes to bring down the price of treasuries with regard to the growth of GDP? And when treasury rates come down, what that does for an average American home buyer who's looking at a 30-year mortgage?
Well, I'd be glad to, Senator, because President Trump is focused on Main Street and not Harvard Square. So a mortgage rate is two components. We could say that it is derivative of the 10-year, but really a 7.5-year. And we have seen that decline. And then it is the spread between the 10-year bond and the actual mortgage security. And we have seen that is at multi-year lows. So what we saw in January was the lowest mortgage rates in almost 3 years.
We've got $37 trillion in debt. A lot of the folks back out there saying that you've got that much debt and you're paying interest.
Monitoring the Treasury Secretary and Senate banking there. Meantime, stocks are coming under a little pressure here. We've lost S&P 6,800. That's about a 2-week low. NASDAQ's lowest since about Thanksgiving. VIX at 23, almost 24 is going to be about a 2-month high. I'm Santoli is here at First 9 watching only utilities as the green sector.
Yes, and the gears are kind of slipping in this rotation. As you saw the attempt, right? Down 1% in the S&P this morning. All of a sudden, you're rushing to rally the Russell positive here by buying cyclicals, non-tech. That has been working, and in fact, those parts of the market are okay. But have they done as much as they can for you? I think that's a big question. At a time when you've got just a little bit of softer macro data, I don't think it's pretty much a game changer at all. But it just shows you the vulnerability. Bigger picture is, for weeks, been talking about just the erratic flows that were running through currency, commodity, crypto markets. We've been insulated from them. The equity and treasury markets have been fine. Been doing that because everybody was wedded to the reacceleration trade, the idea that cyclicals and global reflation was going to rescue the market, even if Mag 7 was for sale and software was all of a sudden mega disrupted. So I think, it's nothing that's changed in that except magnitude. Yesterday, this big momentum reversal and all these strategies, which means you sell the crowded stuff that's been really strong in the last year, you buy the hated stuff that hasn't worked. And we've had this episode a couple of times in the last January, February. You had another one of these kind of quant investor gut checks that caused this exact thing, starting at DeepSeek and then in February, more to the point. So I don't think it's just mechanical, but it's exacerbated by the mechanical factors. And you also have things, we're watching, it's like, okay, can KKR rally on bad number? Can the alternative asset manager? No.
Actually, it's not good because it is worth mentioning. They've suffered as a result, of course, of the decline overall in software in general and the concerns about their exposure.
Yes.
Might to both lending to software companies that are private and or owning some of them in their own portfolios and private equity. Really, private credit has become such a more important part. But this didn't even help. The CFO on the call says it's only about 7% of our AUM. And I would say that's a highly inclusive definition of software. Stocks still getting crushed.
They're still getting crushed. It's opaque enough that you just kind of feel like, do I really have to play here? But also, I think software in particular is getting more hurt than it otherwise would, because it was a sector that people owned precisely because of annual recurring revenue that goes many years into the future. You don't have to worry about it in terms of cyclical anything. And so I do think that's an issue. I think some of the alternative asset managers, you're hearing some noise that it's also this idea that you're going to get just a lower liquidity environment. Whether it's the Kevin Warsh nomination, this idea the balance sheet's going to be small, we're going to privatize the Fed's balance sheet, all this chatter, I don't think it's really impacting the here and now. It's not like the dollar's ripping or anything like that, in the low liquidity type of a move, but it's in the air. Bitcoin can't hold a bid, and I think it brings everything adjacent assets with it.
I was going to ask a different version of things that what David brought up, which is, do the earnings reactions make sense? There's a lot of head scratchers, like Estee Lauder hasn't had a good quarter like this in so long. It's down double digits and it's kind of being in a raise. Ralph Lauren is another one. Google is another one. Palantir continues to get hit after like a mind-blowingly good quarter.
Sure. I mean, Google I can see just based on the run and just the absolute aggression in the CapEx budget. And so I think that's a little more than the norm. But in the rest of them, I do think it's, you came into this year with everybody pretty much taking for granted we're going to get 13-14% earnings growth. You paid for it in advance, and I think that's now the kind of next question. And I think it's going to take better economic numbers with benign rates to keep us there. VIX at 23 means it's much more portfolio stress that's happening than it is, kind of a systemic economic issue. Credits spreads have been super tight. It's not as if people in general are thinking that there's a macro scare going on. I just think that the fact that the S&P 500 has been kind of sidestepping a lot of these hazards when you've had Microsoft awful. I mean, absolutely just under pressure constantly, and no sponsorship from the rest. How many times have I said a broader market is not a safer or more rewarding market? I say it all the time, and that's because if you don't have the ballast of the heavyweight names, it just takes a lot to go right in the rest of the market, and the math of the indexes don't really help you out that much. I'll point out too, 6720 on the S&P is the December low. What you'd never want to see is a December low get broken in the first quarter of the following year. It's one of those old kind of trader rules. Who knows if it's going to matter? We're not there yet. You're almost 1% above. More than 1%.
67.20 because we have an S&P down 1.3%, Nasdaq down about 1.6%. Mike, thank you. Mike Santoli. Attorney Alex Spiro is coming up on the other side of this break. He represents clients, including, of course, Elon Musk, Jay-Z, but he's now representing a bunch of incredibly wealthy people who are pushing back against that California wealth tax. He joins us right here at the Stock Exchange.
Sarah Benzino, Brandon Coley, Jablonski Auto Body, LLC. What she call her?
Oh, you mean Jablonski Auto Body, LLC?
Yeah, she sold the twins' naming rights.
Yeah, like stadiums did. Kids are so expensive these days.
Oasis Breeze, Jane, and Scott. Peter Pan, I'll be there.
We do business with them.
Or we can look at some investment options for you.
What's true?
The right money moves aren't as absurd as you think.
Is this your dream of retirement? How about this week deal? I like fishing. Or is this a little more your stuff?
We had another sell-off today. Was able to hit the gym this morning again. Again, and that's just a whole lot of nothing. I mean, that's what markets are most of the time. Don't let the media tell you otherwise. They always have an intelligent explanation for why things are happening, and they never say we don't know. They never say we don't know why it's going up or down, right? They always have to have something like precise. And I don't know where that stems from, honestly. But yesterday, let's see, as a recap, yesterday, I'm bringing up my notes. Oh yeah, indexing. I went over indexing and easy money. Why indexing I think is going to win this year, like it did last year. Whether the market goes up or down, I think if you've made easy money in the past 3 years, those days are numbered. In my view, based on what I'm seeing, you're seeing Bitcoin take a hit, for example, and some other stocks. I guess hot stocks. If they're good companies, continue to buy more. Those are opportunities to buy more. If you're not sure if it's a good company and you're just guessing, these times are going to be opportunities for you to sell and then reallocate to an indexing strategy that requires really no thought or work or anything. And it's best for people who are working and don't have time or to manage their money and don't have a financial advisor. So I continue to be a fan of indexing, obviously, in the S&P 500. That's not going to change. So, yeah, I mean, at the 3 hour and 4 minute mark in my last live, that's when I talk about it. But I just kind of summarized it. So that's what I'm going to do. I'm going to try to do. If there's something like I think is important, I'll highlight it at the end. I'll bring it back up at the beginning and go from there. But most of the time, it should be a whole lot of nothing. That's what's real. And Charlie Munger, I think Charlie Munger had it right when he said investing is like fishing. Bill Ackman said investing is like watching paint dry. I guess if you don't like investing that much, maybe you should find something else to do. You know what I mean? But if you like fishing and you like it when your rod gets hit, for staying patient and having the right mindset and strong valuation framework, and you stick with that discipline, then you shouldn't it's you shouldn't be worried when things are going haywire, up or down. I mean, and the time in between there's a lot going on underneath the companies, obviously, but you're not in the day-to-day operations. You're an investor in it. There's active, there's passive. Active investors is not the same thing as activist investors, where you're taking a stake in the company so large that you're really running the company. That's what Buffett did in his early days. He'd buy companies so small, he'd be able to buy a stake large enough to have a say. And so people don't know that. He used to be like a corporate raider. And then he changed his ways after I think he ran into some situations where he found unpleasant to fire people and stuff. And so his policy after that was for Berkshire Hathaway, his company, was, hey, look, if things go bad, as long as I'm not going to forever lose money on it, I'm going to keep it open. I'm going to try to keep it open. And that's what he did. But he used to be like an activist investor. So obviously investing has changed since then. And I think he was buying smaller companies. He's still a fan of smaller companies, but you don't want to buy smaller companies just because they're small either. There should be value there. So I don't know if I agree totally with just buying small companies. I mean, I think the philosophy back then was more clear, you know, how you could, and there's a lot that goes into it. It is a risky strategy. I think that's how he got stuck in Berkshire ultimately. You know, it wasn't his worst mistake, but investing's changed. His worst mistakes is mistakes of omission. So it wasn't the fact that he bought and got stuck in Berkshire, you know. So I can go on and on. It's like, it's one of those things is I could talk about investing all day, you know. Unfortunately, I have to like, I have so many stories and like things I can share. It's just, I tell a lot of people like, I can give out ideas and all this stuff, and it's not give out ideas. It's just I wouldn't do that anyway. I don't know why people do that, but not because it's like I have the best ideas, just because there's liability involved. With being wrong, you know, because I can be wrong. For sure, I could be wrong. That's the humility. But anyway, yeah, I mean, that's why it's a humbling sport. If that's what you want to call it. Very humbling. And if you're always hitting a hole in one, you're probably playing the wrong sport. You're probably not doing it right. It's tough. Tough game. It's never happy to see your portfolio go down in value, but as Buffett likes to say, I mean, they're just fluctuations. You haven't lost money. You don't lose money unless you sell. Sometimes you should sell. But if you have a long-term investing strategy, you wouldn't worry about that. Yeah, the market's now negative for the year, and there's always a chance that it can be negative this year. There's always that chance. Yeah, but I forgot how much I love working out in the morning. There's no traffic. There's less people. so your machines aren't all used up, Like the gym I'm at, like there's like 4 treadmills down and they're not fixing them. So it gets hecka packed in the afternoon. And I'm like, dude, I can't. I'm like waiting on treadmills. I never do that. Yeah, I'm seeing a lot of interesting things in the market. Like I said, I have a pretty big watch list that covers all types of what you see on the news. Risk on, risk off, big, small, medium. I feel like, gives me an idea of what's going on. Really, there's an ETF for everything nowadays, by the way. So you could do that too. You could just put ETFs on your watch list that cover certain sectors or themes, If you don't know what an ETF is, as I said, I say it because I know you can Google it. You know what I mean? I don't ever leave y'all with, you know what I mean? It's not a 101 necessarily in terms of like investing 101. I do cover like a variety of topics for all levels, but it usually can. I usually speak to all levels, and if I do say something that I feel like, or if you've never heard of, the point is for you to look it up, and the reason why is because I tell my nephew this too. I tell anybody who's young the same thing. Is the knowledge that I've actually invested time to find, I remember better. If somebody gives me the knowledge, and it doesn't mean you can't make your own mistakes. That's not what I'm saying. That it doesn't mean you can't learn vicariously. I'm more saying if there's a topic that you're not sure of, and you dig a little bit more, many times you remember that a lot better. I think I got that from Charlie Munger or something, but I always knew that too. You don't want to tell people everything because then, first of all, humbly, I don't know everything, and then secondly, you want to leave some room for people to reach and look up stuff themselves, so I've received feedback to say like, hey, like, you should tell people to, you should include things like, hey, invest in this and this and this, and it's just not that's just not what I do. Like, again, it's a liability thing. I don't have a team of lawyers, I'm just me, and I have a lawyer. I have an attorney team, but it's for different purposes. It's not, to sit here and nitpick at every single one of my words, but I do know what I can and can't do, and recommending individual products isn't one of them, and you wouldn't need me to do that anyway. So because it's very easy. Like when I say like an S&P 500 ETF, you could Google that, and there's like a million of them. There's a few reputable ones, so do a little bit of research. But my point is, once you find it, and once you're convinced of it, and then I'm going to say to convince you otherwise, and you found that yourself, and you tend to remember. People tend to remember that longer. That's just, I don't know. That's I don't know. I just feel like that's my philosophy. I've always been like that. I was like that in business school too. It probably frustrated people. People thought I was probably, not that I knew the answer to everything, but certain classes, I was stronger at, like investing. But I think people probably thought I was lazy, but there's some part of it. I just it's the same thing. You want to leave a little bit out there. For people to reach, you know. But sometimes I was like not doing, like I couldn't do everything because I'm managing money as well. You know what I mean? So I've always, this is what I do. Like it's what I've been doing. And then all this talk, like nobody knows what the market's going to do, you know, for the year. I just think that there's a possibility it could be negative, but I don't. Do I think it's do I think it's overvalued? Do I think the market is overvalued? No. You know, that's not what I'm saying. You know, but on the range of things, it's like we've had 3 good, strong years. You know, anything can happen in a span of a year. Is like just it's a very short time period. Well, there's some stocks today. So my question to Charlie Munger when he was in Pasadena, because I play basketball and they always have this like. I used to play basketball. I haven't played ball in a long time. My question to him was, what do you mean by that? Like, you know, basically it was a height thing, and they believe like basketball is generally speaking for tall people, and if you're short, it's going to be tougher. But in investing, it's the same way. There's certain traits, and I was just asking him what traits he meant in investing. And then over the years, I just realized it's probably temperament. One of them is temperament. Is, you know, do you get worked up over small changes in stock quotations? Do you view it the same way? So do you have that right temperament in psychological mindset? I think that's one of the bigger ones. But other than that, I still don't. I don't know what he. I don't even know how he answered it, honestly. But I think a big one's temperament. That's probably the equivalent to being a 7-footer in basketball or something. I mean, the only reason why I did it well in basketball, it was not because I was tall, and quickness only helps so much because the quickness helps, having a shot helps. That's why Steph's so good because he's still 6'3", because he's got a crazy shot. And then but for smaller people, you either have to have dribbles, quickness. So that's what I'm saying. That's why I'm like, maybe he should speak on another sport because I know basketball pretty well. And typically for your smalls or your point guards, that's what you need. Ball handling. It's not just height. But if you have crazy good ball handling, if you have quickness, if you have strength, like let's say you can jump out of the building, you're gonna have a chance. Spud Webb has a chance. So it's like basically don't be a basketball GM for those people just looking at height alone, because they've made so many bad calls. Like Jordan was picked after a 7-footer because they went for height. So in these guards, in a smaller player, you have these more intangible. Like Dwayne Wade was quick; he could get into spaces and score in a way that a big man can't. Dwayne's still 6'4", but he's not 7 feet. He's not 6'9". He's not, all that, right? So he's smaller for the NBA. So if you're just looking at height, so I would just say use another analogy that you're more familiar with to those people using that analogy. Because like as a small player, you could still do well if you can handle the ball. You got crazy good defense, if you're quick. Because I always beat folks in suicides and line drills. I was quick. And then because I made the varsity team, I was told I wouldn't get playing time, and I legit was not getting playing time, so I quit. But thank you to for giving me that opportunity. Anyway, so I almost quit my JV team, but my whole team went and got me, and I stayed on the team. But I was having a hissy fit because I wasn't playing. But I played many other sports. But the point is, like, and if you have a crazy good shot, which, a shot back when I played, it just didn't count for much because you're always trying to pound it into the big man into the post. The whole point of a point guard was to bring the ball up, so you have to have ball handling, and then look to the post or the wing players, and get them involved and get them to score. You're a facilitator. For a point guard, a true point guard, which I was kind of a scorer as well. So, but I had a good shot. I mean, I had a good 3-point shot so I was, that's really the only reason why I survived. But, had I stepped out a few feet and was consistently making it, like Steph Curry style, would I have had more playing time? Maybe, but I didn't think like Steph. And I can't shoot like Steph, you know. The whole point, like the whole Jeremy Lin thing, he could have played in the NBA. It's just he did get a lot of hate. He's the only Asian American player that was playing in his time, in his era. And I posted something about this, about the hate against Asians, because you don't really see it. Like I felt when I was the only Asian on my teams, my organized basketball teams. I mean, it doesn't help that my height, you know, but I was strong, you know. I wish I lifted weights more, but and I had a good shot, but I was the only Asian, and it's just you know, we're smaller, we're shorter, so that does not help. But Jeremy Lin's like 6'3", and then so people are always like, well, what about Yao Ming? How many Yao Ming people do you know? How many 7'6" Asian people do you know? Like none, dude. Like it's like where are the normally sized Asian people, or even taller? I mean, a 6 foot Asian, you know, technically could make point guards in the NBA, but it's more than that. You know, you start realizing like basketball is a little bit more than just skill. It's just like everywhere else. You know, if you have to build the infrastructure and stuff like that, and even have the opportunity. So, for example, Bronny James gets an opportunity because he's LeBron James' son. So, and that's what I mean. I mean, you know, there's a whole infrastructure built up, and for the most part, you know, Asian people don't really focus on building that out. They're, you know, at least for me, I was much more focused on academics, and it's unfortunate because I mean, I still wanted to play basketball. So, and then so you can play other sports though. It's just obviously I like just like every other kid in America, football, basketball, and baseball. So I played baseball, little league, right field, growing up. But I played volleyball and tennis in high school. I got really good at tennis. I was the number 3 ranked. I could beat the number 1 ranked, but I couldn't beat the number 2 ranked. So I was number 3 on my team. And this is after picking up the tennis racket at like my sophomore year. So I was late to tennis. But when I get focused on something, it's what I do. So I'd be out there practicing. And I went from doubles, that's where they put the bad players, to singles, so I ranked all the way 3rd on my team, which didn't mean much. My team wasn't that great, but still, I did that in like 2 years. So, but I quit basketball to play tennis. Essentially, I quit volleyball to play tennis because they didn't want me to be a hitter. I was a good setter. And then I think the athletic coach, I heard some noise from the athletic director at the time. But they never barred me from playing tennis, thankfully. So yeah, a whole lot of nothing today. But you know, on days like this, I just continue to look up, you know, look at stocks, because there's like international stocks. There's like, you know, Warren's always looking at new stocks. You know, so although he's older now, so he's not really doing that probably nowadays. He still goes to the office every day. He's like 90, 95 or something. I have a reaction video for when he announced he was going to retire. It was so sudden the way he announced it, but he was also losing his voice. That's another reason why he's not doing the annual meetings anymore, because he doesn't have the strength, you know. So he's aged, you know, he's aging. And at least he acknowledged it. Was a little bit of a surprise when he said he's been feeling it since 2020, like getting older. I mean, it's 2026, you know, 2025, you know, so. But I mean, but I like Munger's analogy of investing. It's like fishing. If you enjoy fishing, I mean, the time in between is just progress you don't see. That's what I was getting to earlier. You're an active investor, not an activist investor, but an active investor, meaning you're not passive, meaning you're trying to beat the market and you have the time and the skill set to do so. But all that time in between that you're waiting for your idea to come to fruition is not lost time. In the meantime, you're very busy. You're very busy looking for new stuff, rebalancing if you need to. There's a lot of stuff. It's a lot. That's why I'm amazed. I'm like, people really don't understand like investing and what it's all about. Part of the reason why I'm doing these videos. You know. Like I said, I can look back on it. My partners can look back on it. whatever. I know we're going to talk individual stocks, but I don't have to. It's not going to be helpful to the audience. You can buy more, but you don't have to if things drop. If you're passively investing, what are you doing? You're contributing every paycheck, whatever that percentage is. You can always reduce it or increase it based on circumstances. Anthony Davis is so fragile. His body is. No, I'm not talking about him mentally or nothing. It's just, and him getting traded again for peanuts. Number one, shows his value. Number two, Rich Paul's behind that. The agent is behind Trae Young and AD. There's like so many times he's like putting teams together himself. I think the NBA needs to look into that. It really puts owners in a tough spot. He's always negotiating like super high contract for his players. And then he kind of colludes to, in my view, and then he put LeBron and AD together. Now he's putting Trae Young and AD together. There's got to be some rules in place in the NBA, that protects teams, owners, fans, because I think that reduces the fan experience. Like theoretically, he could network and then just, what if every single player, every single big star was managed by him? He could just put superstar teams together himself. I think the NBA needs to look into that. Why is an agent putting two teams together himself? It doesn't make sense. And I think it ruins the fan experience. NBA. I'm a Sacramento Kings fan, so I can complain about getting the short end of the stick when it comes to the NBA. In terms of the Western Conference Finals, not in terms of them keeping the Kings of Sacramento. I thank the NBA for that one. Talking about, feeling like you're not getting a fair shake. We didn't keep Sacramento in here to keep getting shafted. Like, the whole De'Aaron Fox thing, he forced his way out of Sacramento, But I think the players got to start realizing it, and the fans got to start speaking on it. Any player movement by a powerful agent like Rich Paul needs to be looked at. It reduces competition. It reduces the fan experience. It goes back to that, building of super teams, which yes, Ray Allen, Paul Pierce, and Kevin Garnett did that, but they were older when they did that. They weren't in their super prime like LeBron, Bosh, and Wade. They won one championship together, and they were trying to cobble it together at the last minute. And so I think fans have been complaining about that for a while. These super teams where you wait all this time, you draft a franchise player, you do the right things to do, and draft a generational player, and they leave to go to a super team, So wherever Giannis is going, would I be surprised if it was a super team? Yes, but I think no. But I hope it isn't. It isn't like a 2022 Warriors with Kevin Durant, Klay Thompson, Steph Curry, and Draymond. That was a super team. Again, in Kevin Durant's super prime. It's like, I would say LeBron is the GOAT of business. He's a very business-minded person. And I think that's actually taken away from the on-court product. Too focused on these business opportunities. Too many conflicts of interest. It's gone too far away from just being about the game. And I know things have gotten more complex, but Jordan was about the game. That's it. I think Kobe was about the game. That's it. Business came after. You're building a logo before you even know what the logo means. The Jumpman, I feel like, was pretty organic. Jumpman is because he can jump out of the jump out of the gym. Like, who can jump like Jordan? So the Jumpman makes sense. LeBron's logo is should be like a Wall Street sign or something. I don't know. Money, dollars. That's the GOAT. The GOAT of dollar bills. And I agree with Dylan Brooks. All these players with their own podcasts, stop. Like, active players, stop doing it. Podcast P, stop doing it, man. Well, unless you're gonna retire, but I know you're building your following now, but it's like, I think that's what Jordan is saying. You build your following by playing well, there's such bad companies in the stock market. Sometimes I'm like, why do these companies even exist? You know, it's crazy. And some of them stop existing in due time. You know, like this one, I literally, but some of them don't. Like some of them keep trading. And I'm just like, oh my gosh, how is this damn stock still trading? Yeah, so this one I just looked up literally is, I don't think exists anymore. Let's see. No, I don't think so. Well, it got acquired, so that can happen too. Yo, I went and bought, when I bought my iPhone, I was signed up for a bunch of subscriptions, so y'all got to be careful. I had to obviously cancel them because half of them I didn't need, but I wasn't told that I was being signed up for all these subscriptions and their trials. I'm going to double check right now. I canceled them early because, you know, these subscriptions, they're tricky. If you forget, they charge you. Like Uber did that to me. And then I tried to get a refund. I was like, yo, I didn't even know you were charging me all these. It was like a year. Oh, we can't refund you. That's messed up. And I think they got sued for it, for being tricky. I cannot believe how many apps exist. I like Keon Ellis. I'm sad we lost him, but you know what? It's okay. Jonathan Kuminga headed to, I don't know where he's headed to.
Officers to the Gestapo asking people for their papers. What's your response to him?
Well, look, first of all, he's a great guy. We had a tremendous success before the election. I think it was his biggest interview ever. It was over 300 million people. It was very good. She didn't want to do it. You know, she decided not to do it because she's not capable. But I spoke to him 3 days ago. We had a great conversation. And all I'm doing, I have to keep.
Did he mention this to you? Did you guys talk about this? The ICE enforcement?
I just had a good conversation. I think he's a great guy, and I think he likes me too. And you know, liking me isn't important. What happens is that I think we do a phenomenal job, but I don't think we're good at public relations.
So for example, now the market's recovering. So just know, like, the interest of the news and you is like not related. The interest of the news is to like generate headlines and get you excited about nothing. I'm talking about financial media. I'm watching it right now still. Not for the reasons people usually sometimes think, but it's the financial, it's a tough game. It is. I mean, I feel for them, but I think they have some good stuff, like earnings, CEO interviews. I like those. And economic stuff, I like those. Helpful. I'm not always keeping up with everything, so they do a good job of covering a lot of stuff. But then they also get into, like I said, the daily pontification of like what's going on and why. And sometimes they could be right. Many times they're not. If it's a big move, sometimes you know why, because this person said this, or many times or lately it's been because of the president said this or that, so, and it affects this industry, so that's more clear. But most days, it doesn't even matter, Let me get some coffee. Double checking my mute. Okay, it's off. I'm back. Took a little break. Good for my back. I gotta take breaks. I guess Tom Brady is going to be in town for his card shop in Sacramento. I'm surprised he opened one in Sac, to be honest. Do what you love. He seems to be pretty passionate about collectibles, things like that. I think that's cool. I mean, he can literally be his own collectible. Like, I mean, it could be just a store with his own signatures, and it'd probably do well. I mean, halfway decent. I don't know. I know he's from NorCal. I just think Sacramento is a slightly different market than anything in the Bay. But I think that's a great vote of confidence from Tom. I mean, I hope. Well, that's the thing. He doesn't have any roots really in Sacramento necessarily, but I hope he can get this. I hope he can get the support that it needs. Not too often you get a player / celebrity of his caliber opening up a store in your community.
This is